I finally got the courage to start my own business, American Gold Exchange, in 1998. That was 27 years and $2 billion ago of flawless transactions.
Phenomenal. Congratulations. From anybody doing anything since 1998 is, I mean, that's a successful business for anything, but especially in the precious metals market. Tell us the story about what happened in 1980 and what people found in the vault. And I want to come back to that later and why you do what you do today and why yours is so much better. But I think a lot of people, there's a fear or maybe a misrepresented fear that there's going to be flies coming out of the vault when they open up the door, when they go to look for their gold. So tell us that story.
Right. Well, we were talking off air a bit about storage. Do we store for people? And I said, no, we do not store for people. This is a physical product. You want to control it. You want to own it yourself and control it. Now, we can recommend independent storage facilities, but I don't think it's in your best interest to have your dealer store your metal for you, because we've had a couple of spectacular failures over the years, one of which was in 1982, a company that was storing gold for people, gold bars, went out of business, and they found when they opened the vault that the bars inside the vault were actually wood and painted to look like gold.
Sounds like something out of a Looney Tunes cartoon, really. So
yeah, quite a surprise, Wile E. Coyote.
So that's an example of why physical ownership and control, and we believe big time in the value of control and agency and personal possession, not outsourcing our financial lives to Wall Street gurus and that sort of thing. And we believe in the power of the contract. And that's really, you tell me what you think, but as I think about precious metals, I think about the contract that I have with you and me and the rest of civilization. When I go to the grocery store in a pre-US dollar world, I might have had, and really even not that long ago, I mean, even not that long ago, coins had real silver in them, for example. What do you think it is about silver, platinum, palladium, gold, kind of the four big precious metals that have stood the test of time? Why is it that of all things in the universe, these elements, these chemical elements, matter so much to humanity and civilizations?
Well, gold in particular goes back to ancient times. King Tutankhamun, King Tut's burial mask had 22 pounds of pure gold in it, and that was 2500 BC. Gold has always had an allure for a couple different reasons. Number one, it's scarce in the ground, so it's hard to find. Number two, it's malleable. You can make it into things pretty easily. Number three, it's impervious to the elements. You can put gold into just about anything, heat, seawater, adverse chemicals. It'll survive. And it's got that really great color to it, which is very unusual. So those characteristics made gold valuable to people in ancient times, and it's carried all the way to today. Silver has similar characteristics. It's found in the ground about 20 parts to 1 part gold. It is not as impervious to the elements. It can be damaged by seawater, for example, but it is a lesser unit of exchange in terms of parts. It takes 20, 40, today 100 parts silver to equal 1 part gold. But our currency, going back to when the U.S. was founded and the mint established in 1793, was based on 20 parts silver equaled 1 part gold. And we've had gold coins from 1795 to 1933 and silver coins from 1793 all the way to 1964.
And okay, so I have so many questions. One, why did the U.S. outlaw gold? I think that's a surprise for our younger listeners. So tell us that history story. What were they trying to protect against by outlawing precious metals and ownership among the American populace?
Well, it's only in America where gold was made illegal to own between 1933 and 1974. The rest of the world never had that law. So gold coins around the world and the monetary system from the late 1700s all the way to 1933 was based on a fixed gold price. And from 1850 in particular to 1933, the gold price was fixed internationally at $20.67 per ounce. So all of the gold coins that were minted, whether they were US gold coins, European, British, Norway, France, Italy, Spain, South America, whatever, were based on that monetary value of gold, $20.67. So a $20 US gold piece, for example, had a little less than an ounce of gold in it to equal exactly gold weight in face value. Now, when we got into the financial crash of Wall Street in 1929 and then the Great Depression, President Roosevelt at the time wanted to print more money than he could to stimulate the economy, print more money than he could in gold coins. So he confiscated gold. And we were already transitioning to paper currency at that point in time, but it hadn't been fully accepted. And this kind of pushed that over the edge. So the U.S. confiscated gold to stimulate the economy in the middle of a global depression. All the gold was taken back in, and the gold bars that are in Fort Knox are not pure gold. They're the same purity of these old coins. They were just melted down into bars. Pure gold is very soft. If you add a little alloy to it, a little bit, 10% of other, it hardens it up a lot. So a coin in circulation will last a lot longer. So anyway, we confiscated the gold in 1933. Gold price was internationally revalued 2 years later, 1935, at $35 an ounce, a 75% increase, which made all the world's gold currency now obsolete as currency because the intrinsic value of the coins was worth, 75% more than the face value of the coins. So that ended gold coinage as the norm, which had been the norm for centuries. Then we had World War II, and coming out of World War II, we needed a new monetary system. So we made the dollar the world's reserve currency backed by gold in 1945. And that lasted until 1971 when Richard Nixon took us off of the gold standard, where we no longer had an ounce of gold to back every dollar that we printed because, again, politicians were printing more money than we had assets to back it. Pretty big theme right now in the world.
Yeah.
And now we've got fiat currency in earnest, which is, our paper dollar is backed by the full faith and credit of the United States government, but nothing else. So that is how our currency system has evolved. You can call some things money. Gold is money, and it used to be currency. What we have in our pocket really isn't money anymore because it doesn't have value. It's just currency.
Yeah. What is the definition of money to you, and how does that relate to currency?
Well, money is something that has value that you can transact in. A barrel of oil has value, but it's hard to transact in a barrel of oil. Mm-hmm. That's why gold and silver in particular were perfect to be both for centuries. And, now we've made the value of them much higher than, currency value will allow. So you're using something else, which is paper or copper nickel. The coins in our pocket are copper nickel. And to give you a perfect inflation story that most people can relate to, our silver coins were 90% silver up to and including 1964. In 1964, a silver quarter would buy you a gallon of gas. That same quarter in 1965, 25 cents face value, no longer had silver in it. It's the same as the quarter you have in your pocket today, copper nickel. In 1965, it would buy you a gallon of gas. Today, how much is that copper nickel quarter going to get you? Less than a tenth of a gallon of gas, right? Silver quarter will buy you almost 2 gallons of gas today.
Is that right?
Yep.
Well, and I've seen other presentations where 10, let's see, what is it? Is it 10 kilograms of gold buys the average house 100 years ago and then also today? Am I thinking correctly there?
Yeah, 300 ounces.
Yeah, okay.
Yep, that's about right. Gold holds its purchasing power over time.
So that's interesting. And even I've seen also like a gold coin, a 1 ounce, troy ounce coin will get a man a nice suit 100 years ago and about the same nice suit today. I mean, although prices with gold have been unbelievable. I mean, that's a very nice suit now as we're recording this. Tell us what's happened in the world of precious metals in the last, 3 to 6 months.
Well, gold has skyrocketed over the last year and a half, in particular. We've gone through different episodes where our debt has just exploded for a period of time following the great financial crisis. We had some stability in 2013 to 2019. Then COVID hit. We had another bout of explosive debt growth, and it's not just the U.S.; it's global. And the gold prices responded to that. What's really happened since 2022, which is material, is we sanctioned Russia after they invaded the Ukraine. We seized their assets. We threw them off of the SWIFT international banking system. And a lot of countries in the global south realized that, hey, if we could do it to Russia, we could do it to them if they were politically afoul of the United States. And gold in a vault can't be seized or sanctioned. So central banks, especially since the Russian invasion of Ukraine, have been buying gold at record rates, so much so that they've impacted the price. A year ago this time, the gold price, April of 2022, was $2,300 an ounce. Today, it's $1,000 an ounce higher because of central bank gold buying primarily, and a growing lack of trust in the U.S. to run our finances properly as the world's keeper of the coin, so to speak. Right?
Absolutely. Well, do you think that it's governments that are mainly driving up this price? Are mere mortals like you and I pushing the price higher? Or is it mostly shadow banking and governments and so forth clawing back bullion?
Central bankers were net sellers of gold between 1950, when we went off the gold standard per se. They didn't need to hold it in their vaults anymore because we had the U.S. dollar. It's the world's reserve currency, all the way to 2010. For most of that period of time, central bankers were net sellers of gold. Following the great financial crisis and the debt explosion that occurred when we more than doubled our debt, central bankers became net buyers of gold. So they've been buying 500 tons a year, 2011 through 2021, pretty steadily. The mines annually make about 3,500 tons. So they're nipping into the available supply. But then the last 3 years, they've doubled that to over 1,000 tons a year, which is close to a third of the annual mine production. So they're really one of the fundamental drivers. But it's not so much that gold is increasing in price. That's upside down. It's that the currency that we use to buy gold or silver or other commodities like oil are buying less and less. That's really the right way to look at it.
Yeah.
And, we've had a real bout following the Liberation Day tariff announcement, where tariffs were much higher than anyone expected, where our U.S. treasuries for a short period of time were rejected in the marketplace. And in times of turmoil economically, the U.S. dollar and treasuries have always been safe haven ahead of gold. And just in the last couple of weeks, we've seen that flip-flop on its head, where gold stepped ahead of treasuries as safe haven for the world, which is a big change. Now, that's not to say it's here to stay. We're seeing some stability now, which we didn't have. But a fundamental lack of trust in the U.S. and how we run our country has been material in making gold go from about 2,900 all the way to 3,500 in a very short period of time, which is a big move for gold, 20%.
It sure is. Well, and most of the time you shouldn't, I would say, as a certified financial planner, I'm not looking at precious metals as a speculative investment per se. But I heard earlier today on the Wall Street Journal, of all places, they referred to gold as nature's Bitcoin. Now, would you react to that phrase, nature's Bitcoin? And are precious metals investments, or are they storehouses of wealth? How would you classify that?
I think for most people, you should look at precious metals as a storehouse of wealth. It's a great way to save money outside of a depreciating currency. Politicians run our finances, and they get reelected by making promises. And they've overpromised now for 40 years, especially. I mean, the last time we had a balanced budget was under Bill Clinton in 1998, 1999. And that's when the gold price hit a record low of $250 an ounce.
And that's right when you got into business, if I recall. Is that right?
Yep.
Okay.
That's when I started the American Gold Exchange, right at the bottom, basically. And, we've seen our debt between 2004 and 2014, our debt went from 7 trillion to 17 trillion. Between 2014 and 2024, it went from 17 trillion now to 36 trillion. So
Wow.
where are you going to be in 2034? 72 trillion? If it keeps doubling, I don't think that's going to happen, but that's the pace we've been on. And gold tends to climb a wall of worry. And what we're seeing right now is some worry globally. This is not a US centric phenomenon. This is a global phenomenon. It's the rest of the world saying, hey, we need an insurance policy. And that's another way to look at precious metals. You don't need a lot, but they also are an insurance policy for the rest of your finances. Because if something happens that's untowards in the financial system, like we saw during the great financial crisis or during COVID, gold tends to respond really well then.